Okay, so hello everyone. So this is the introduction to Forex trading, a beginner's guide. So um let's start with what is Forex trading. Forex trading is simply the exchange of currency, of one currency to another. That's just simply what Forex trading is. The exchange of one currency to another. Let's say for people that do travel a lot, like from Nigeria or your country, let's say you travel to somewhere like United States of America, you have to exchange your money, your local currency to dollar, United States dollar. Then in order to be able to go there. So let's say that when you came, let's use naira and dollar for example. When you came to when you come to change your naira to dollar, that $1 is up to 1,000 naira, then you change it before going. Then on your way back, you change your dollar back to naira, and now they tell you that a dollar is 1,200 naira, which means you've made a profit of 200. And let's assume that they tell you that a dollar is now 700 naira. That's naira gain a little strength over the past few months of your travel. Now you exchange a dollar to 700 naira, which means you've lost 300 naira. So that is just simply what forex trading is. And then there are people that try to predict it, to predict this moment using the financial charts. They try to predict when and where the market will buy or sell. They are the ones called forex traders or financial traders. Everyone is actually a forex trader, but they are just the ones like you and I that predict the markets using technical analysis, fundamental analysis, or sentimental analysis. So tools that every beginner trader should have. First of all, is a laptop. What do you need your laptop for? You need it to, you download this app called Trading View on it. That is where you analyze your charts. You analyze everything, the pairs you are trading, the currencies you are trading, either commodities or bonds or futures or crypto. That is where you analyze everything you are trading with your laptop. You can't use your phone because of the screen size. Now, you have your MetaTrader, you have your phone. Your phone is just to download your MetaTrader where you execute every trade. After analyzing on your chart, you come to your MetaTrader and like after analyzing and your analysis said you should buy, where you execute that order is on your MetaTrader. Your analysis said you should sell, where you execute that order is on your MetaTrader. But before you do all these things, you will have to fund your brokerage account. Um, so this brokerage account is like the link between us and the financial market, the main market itself, because what we are doing as retail traders, we don't actually really have access into the main market. So this broker forms a link between us and the main market. We give them money, we execute our trade, they help us execute it for us. That is what they do. Even more than over $4 trillion or more is being traded in these financial markets every single day. So the people that have the capacity to trade such is like the hedge funds, the central banks, these big institutions. They are the ones that have that capacity to be in the main financial market, not us. We are just retail traders. So obviously you need access to the internet, of course. So now for Forex in particular, Forex market is traded 24 hours a day and 5 days in a week, excluding Sundays and Saturdays. So you can trade it Monday, Tuesday, Wednesday, Thursday, Friday. And then um, there are sessions. Every single day have its own session. There is Asian session. Asian session means that there are pairs you can trade during Asian session, which is JPY, Japanese yen, NZD, AUD, and CHF. These four pairs you can trade it for Forex pairs. You can trade it during Asian session. Then for London and New York, I think any pair can be traded during these two times. Let's say GBP USD won't move, will frustrate you when you trade it in the night. You get, there is this pair. You don't actually, when trading, you won't see a single currency. Just like you open your chart and then on your trading view, you just see GBP. You are trading GBP. It has to come with another pair. GBP USD, GBP JPY, and USD CHF, Euro USD. It has to come in pairs. The one that comes first, like for example GBP USD, which should be popular, or Euro USD, the one that comes first is called the base currency. The one that comes second is called the quote currency. For GBP USD, GBP is the base currency, USD is the quote currency. So every trade that occurs there in that pair is just based on GBP. When you want to buy GBP USD, what you're doing is trying to know how many units of USD can be able to purchase this amount of GBP. When you want to sell, how many units of USD can be able to purchase this amount of GBP. That is just it. So for London pairs, GBP, obviously you can trade it. Even Euro USD, GBP USD, Euro USD are good for London and New York. Yes, they are good. You can trade other pairs during London and New York as well, especially USD pairs, GBP pairs. So now, this is pips. The term pip is used in Forex as the method of describing the change in value between two currencies as they move either up or down. For example, where the value of the GBP USD moves from 1.5125 to 1.5126, then that incremental movement represents 1 pip. Each movement on your chart is calculated in pips. You get, each movement is calculated in pips, but your broker will be doing that calculation for you, so you won't be spending your time on the chart calculating pips. Now there is spread. A spread in Forex is the difference between the bid and the ask price of every currency pair. So let's say you want to buy, okay, let's go back here. Let's say you want to buy GBP USD at 1.5125, and then your broker offers you GBP USD at 1.5126 or 1.5127. So this is where you're buying from, but your broker executed your trade at 1.5126 or 1.5127. So that difference in pips is what we call spread. You get? So you also need to pay attention to the broker you use. So you need to pay attention to their spread so that you won't be in profit on trading view, in good profit on trading view, and be seeing small profit on your broker. Is actually frustrating. So there's lot size. Lot size is a unit measuring a transaction amount. Just like when you place orders on your trading platform, orders are placed in sizes quoted in lots. Lot size is just like saying how much can I afford to risk in this trade. It's just another way of saying how much you get. So now there is leverage. Leverage is simply having the ability to control a large amount of money using none or very little of your own money and borrowing the rest. You have to be careful with leverage. You get, because as a beginner, I don't think you need to use a leverage that is more than 1:500. I don't think you need to use it. Even if you can use less, use it until you can be able to understand the financial market. Then you can go for the bigger ones. So let's say you deposit $1,000 and you want to use it, and then you use a leverage of 1:100, which means for that $1,000 will be like you're trading $100,000 account. You get uh, your sizes will now be bigger, not limited to $1,000. So margin and leverage are kind of similar. So that $1,000 that you deposited in your brokerage account, that your broker set aside in order for you to use leverage, that's called margin. Margin is amount of money needed to open a position with a broker. Equity is how much money the trader currently has when trading orders are active. Let's say you have $100 deposited in your account, then you open GBP to trade it. After analyzing after analyzing the chart, your strategy or your setup says you should buy, and then you click on buy. Let's say the market moves in $10 profit for you. Your equity will be $110. It will only reflect in your balance after you've closed the trade. And let's say you're selling and you're in loss of $10. Your equity will be $90. It will only reflect in your balance after you've closed the trade. Now, take profit and stop loss. They are simply prices on the chart where if market gets on either of them, you make profit or loss. So when you're done analyzing the chart, you set a particular price where if price gets to this place, I am wrong. And you set a particular price where if price gets to this place, I am right. That is just what take profit and stop loss is. You get, if price gets to the place that I am wrong, I lose money. If price gets to the place that I am right, I make money. So that's just it. Now, market order types. There is market execution. Market execution is just simply you analyze and then immediately after analysis, your signal says buy and you just go straight to your MetaTrader 5 and click on buy. Instantly, your broker executes your order for you. For buy limit, let's say that the market is bullish, the market is buying, but you need the market to sell a little bit to your zone before you can buy along with it. You set your entry below the current price. Then when market sells and touches your entry, then it can continue buying. The same with sell limit. Market is selling, but you need market to buy to some certain zone before you start selling. Then you set your entry there. When market gets there, your broker automatically triggers the sell limit for you. Now, buy stop is when market is buying, you place your order above. It's just the opposite of sell buy limit. Instead of placing your order below, you place your order above for buy stop. Meaning that when price gets to this particular price, it has no business selling again. It should just keep buying from there. That is where buy stop comes in. Sell stop is just simply when market is selling and then it gets and then you set your entry below the current price, and then market sells below, and you set your entry below the current price, expecting market to sell to that particular entry that you set, that when it gets there, it has no business retracing back again. So that is what sell stop and buy stop is. Now, there are types of analysis. There is fundamental, technical, and sentimental analysis. Fundamental is just the use of news updates. You can use your Forex factory for that, to be checking news, checking interest rates, checking when uh, this country will be announcing things like uh, non-farm payroll. They have CPI and so many of them. Then on the Forex factory, there are high impact news which are represented on with a red folder, medium impact news which are represented with an orange folder, and low impact news which is represented in a, a yellow folder. Pay attention more to the red folder news, but don't neglect others. Yeah. Technical analysis is just simply the use of uh, chart patterns, support and resistance zones, other blocks, and so many of them, indicators. There are so many technical analysis tools that traders use. Now, sentimental analysis is just, let's say that there is a war going on, and people start buying gold and pulling their money out of the bank. You start expecting gold to buy. These people say gold you buy. People will say that they are investing their money in so place. So all those sentiments, all those things they are saying, you use it to, you apply your knowledge to it and use it to your own advantage. Okay, for the last part, for the introduction for this beginner's course, for part one, because there will be part two where we'll be talking more of practical aspects, which is candlesticks and a lot of them. So that's why I split it into two, so that it won't be so big for you guys to grasp. So now, finding a broker, like I said previously about spread, you need to find a broker with good spread. A good spread is like, the more tight the spread, the better. If you want to buy a price, a pair, let me say at 5, for example, at number 5, for example, this is an example, then your broker gives you that price, that uh, set your order at number 6. It's not too bad, or even number 7, it's not too bad. But if your broker goes and set your order to number 9, number 8, number 9, number 10, it's very, very far away from where you set your entry, which means more risk for you. And even before the market gets to your stop loss on MT, on trading view, your broker has already taken you out of the trade. Then sometimes trading view, on trading view, the market will hit your take profit, but your broker will not close your trade in profit. Then unfortunately for some people, the market will reverse. Something that would have been profit for them, it now goes in loss because the broker did not close their trade. Accreditation, you need to be sure that they are legit. Check everything about them, browse about them, read their terms and conditions to be sure that you can cope with them. You can adjust to the terms and conditions. Then, as a beginner trader, it's advisable for you to find a broker with demonstration account, where you trade paper money. You trade paper money, not live account, and use the paper money to practice. Then you need to see reviews of what people say about them. There are different types of forex charts which we'll be discussing in the part 2 of this course. Line chart, bar chart, candlestick, but we'll go more in depth in the candlestick, because candlestick is like the language of the market. that is candlestick. So all right, I will see you guys in the part 2 of this video of this stuff. Take care.